Hello, welcome back to this week's market update. Today is Monday, May 13th, 2024, and we will jump right in. Last week was quiet but positive for markets as investors await key inflationary data this week, the CPI, the PPI, as well as some other important economic data like retail sales that we'll get on Wednesday. As of close on Friday, May 10th, we saw the Dow Jones Industrial Average up 2.16% for the week, the S&P 500 up 1.85% on the week, the Nasdaq Composite up 1.14% for the week, and then the Barclays Ag just about up 0.05% as of close on Friday. Before we take a look at last week's market events, just wanted to take a quick look at this week's market events and the really important PPI and CPI prints that we'll be getting. The PPI on Tuesday and then the CPI on Wednesday. So currently from the Federal Reserve Bank of Cleveland, they are projecting a 3.5% headline inflation rate and then core CPI at just about 3.7% from a year ago in the month of April. So that's what the consensus is, and really any deviation above it will probably lead to a bit of a sell-off, and then any deviation with inflation coming below these projected rates here will likely incite a bit of a market rally. So we'll continue to see what the market does in reaction to these events. Then later on this month, we'll see the PCE. They're currently projecting it at 2.7%, and then the core PCE also at 2.7%. So lots of expectations around inflation this week. We'll see how that rolls out and definitely keep an eye on that as we watch the markets this week. Backtracking to last week's market events, we got consumer credit data for the month of March, which closed out the first quarter of 2024. That showed a 1.5% increase in the amount of consumer credit outstanding or consumer debt, and that was broken down by a 0.1% increase in revolving credit, which are things like credit cards, as well as personal lines of credit, and then a greater increase, about 2%, in the amount of non-revolving credit. Think car loans, think personal loans, kind of fixed amounts that you take out in a loan. You can see here that was a small downtick from the first quarter, so that's quite notable that we did see a small pullback. However, these are pretty normal. You can see we had that same occurrence in Q4 2022 to Q1 2023, which can be somewhat seasonal just in coming out of the holiday season. Consumers might be paying off their debt a little bit. And then finally, we look at the terms of credit on this debt for the first quarter. That puts new car notes around 8.2 to 8.4% on average for their interest rates, and then credit cards having an average interest rate between 21 to 22%. And then finally, personal loans at about 12.5% interest rate. So all of this will be very interesting to see as the Fed cuts rates. Other things at play in the consumer credit dynamics are student loan debt forgiveness. So that'll be big in terms of the election coming up and different political priorities, as well as consumer expectations of economic conditions, inflation, and a host of all other factors. So we'll continue to keep an eye on it. Also, last week we got consumer sentiment data from the University of Michigan with their index clocking in at 67.4 for the month of May. This was more than 11% lower than estimates and 12.7% lower than April. So we saw quite a bit drop off from a relatively neutral, unchanged level of consumer sentiment in the last few months. And a lot of this came down to an increase in the expected change of unemployment during the next year. So you can see very, very sharp uptick in the month of May here. The consumers reported that they expect the unemployment rate to rise as much as 130 bips in the next year. So that would bring the current unemployment rate of 3.9% to a 5.2% from a year from now. So that would be quite a bit of a jump in unemployment. Obviously, this is just an index of consumers reporting their feelings about the economy and not necessarily reality, but that is quite notable that consumers who kind of, are in the everyday workforce can see quite a bit of a shift in the labor market dynamics. So this will be important to watch as we see how consumers change their spending, how they change their debt usage, and just overall economic conditions. So really important stuff here as we survey the market. Last week, we saw the highest initial claims numbers for the week ending May 4th, the highest level of new claims in the last 8 months. So that jumped to 231,000 new unemployment claims reported for this first week of May. And this coincides with multiple other consumer surveys, like the one we just looked at, indicating a decline in the labor market. So although this is, an 8-month high in the initial claims levels, this is quite low, and you can see even just a year ago they were above the 250 level, and we still had quite a strong labor market. So, although we are seeing a rise in the bearishness of the labor market dynamics in the US, this is quite small when you put it into historical perspective. Last but not least, we had the final of the Big Five earnings reporting weeks for the first quarter of 2024. Across the S&P 500, we saw an average growth rate of 4.1% in year-over-year earnings growth, with 92% of the S&P already reporting. By sector, we saw sectors like communication services do quite well from a year ago. Utilities also did quite well, and then consumer discretionary did the best, ever so slightly, in year-on-year earnings growth. Then the sectors that saw a pretty big pullback in their earnings, we saw healthcare, energy, basic materials, as well as defensive, all see quite a bit of pullbacks in their earnings from a year ago. So, really interesting stuff. Overall, earnings have come out better than expected. We believe the market will eventually even out to about a 6% earnings growth based on the remaining 8% of companies that will see are likely to see stronger earnings growth in this last leg of reporting. And we will continue to keep an eye on corporate earnings as we know that drives a lot of the pressure on stocks. Thank you so much for tuning into our market update this week. We look forward to providing another update next week with all of the really crucial inflationary data that we're getting this week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.